There is an important announcement that the Reserve Bank will be buying $5 billion in the form of 3-year swaps to infuse liquidity in the market. What does this mean for the dollar rupee? Devesh Divya, head of FX research for ASEAN and South Asia at Standard Chartered Bank, joins us on the phone line. Devesh, what's the call on the dollar rupee now? We have seen it move one way, appreciating. Now with this dollar swap being announced, should we see a limit to the appreciation at all?
Morning, Lata. Actually, I would argue that the impact on the spot market of the latest announcement in terms of the swaps is going to be fairly limited. There are a few factors driving that, which are basically offsetting in my view. One is, of course, I think there's expectation that more inflows can come in, but likely to be on a hedged basis. There's also now doubts on how much OMOs the RBI can do. And of course, I mean, if it's an liquidity injection tool at the end, it's fundamentally considered to be a negative for the currency. But it's not, in my view, an intervention strategy by the RBI, as some commentary are suggesting. I think the impact on spot is going to be very limited of the announcement. The biggest impact, in my view, is hedging costs for importers is going to be lower. Forward premium, I think, is going to be compressed further because of the RBI announcement. That's where we see the biggest impact.
Okay. What is your view on the dollar anyway? Because we've seen such a gush of equity flows.
Well, I think in the short term, there's definitely scope for some more INR strength, in my view. I mean, basically what we had seen at the start of the year was a lot of risk premium was getting priced into FX on politics, elections, geopolitics. Now we are seeing that getting priced out as some of those concerns are sort of now fading away. So I think that sort of does continue, at least in the lead up to the election. So I think I would expect INR to stay below the 70 level over the coming weeks. But if you ask me fundamentally, I don't think much has changed. Oil prices are still moving higher. In fact, overnight it's broken to new year-to-date highs in terms of oil. You still have a current account deficit situation, and global liquidity is still getting tighter because of the Fed's quantitative tightening. So I think from a medium to long-term perspective, I would still stay cautious on rupee. But I think short-term, next few weeks, I think rupee can still perform well.
Okay. So by perform well, you mean what are the levels that you're looking at?
I think, I mean, if I just look at the technicals, it can dollar rupee can move all the way lower towards the 68 level. So I think maybe the 68 to 70 seems like the likely trading zone over the next couple of weeks.
Okay. What about the bonds? I mean, because of the liquidity injection from the RBI, what immediate impact do you think it could have on bond prices and yields?
So in terms of the rates impact, we think the net impact is actually going to be a steepening of the IGB yield curve. So short end is probably likely to be anchored, but given markets are now considering if there's going to be any tapering of the OMO purchases, you could see the long end of the curve push higher, yields push higher. So I think the net impact is going to be a steeper curve where the long ends yields are actually higher as a result of the swap announcement.
Yeah, at the moment it's already opened about 3 basis points higher. 740, I think, is where the new 10-year has opened, and 758. It was 754 yesterday, I think, when we closed. Now it's 758 after this announcement. But Devesh, more generally, you will expect a rate cut, isn't it? Or are you expecting more in April 5th? And therefore, would you be a bond buyer at all?
So in terms of our policy call, we are looking for a rate cut at the April meeting. And I think we'll obviously watch out the developments in sort of April and May in terms of monsoon expectations and elections outcome. And of course, I think beyond that, it's a lot more uncertain whether there's going to be another additional rate cut. But if you look at market pricing, market is already pricing in about 2 more rate cuts by the RBI. So I don't think that announcement in April of policy easing is going to impact markets that much. In terms of our bias, we are definitely biased to be a long duration For most EM Asian bond markets, I think India is also one of them. We still have a positive duration outlook, but we are sort of favoring more the 3-year to 5-year segment in terms of bonds recommendations, not the 10-year, purely because of the supply issue.
Okay, well, we leave it at that. Devesh, thanks so much for joining us.